written settlement agreement.
Hello, everybody, and welcome back to the show. Well, this is part 2 of the show where we include your questions for our guest who today is attorney Dean Sutherland. And we are, of course, talking about the hot topic of bad faith. And many thanks to all of you out there for sending in those great questions. And I want to remind you that you can send your legal questions in all week long. We'll announce the upcoming topic on Twitter, on Facebook, and on the website. And all of the contact information will be coming up shortly. It's really great to have you here on the program. This is such an important topic that we're talking about. Let's talk a little bit about some of the laws and how they have changed since Hurricane Katrina. We've since had several major storms, but there were some significant changes, specifically after Hurricane Katrina, that deal with this issue of bad faith.
Yeah, one of the big issues after any storm where you have both water damage and wind damage and wind-driven water damage, the latter two are covered under homeowners policy. Flood is not. There's a national flood policy and so your homeowners policy excludes that. So you have a house that's both been damaged with flood water and by wind damage. How does the insurance company know what to pay?
Right.
How do you know what you're entitled to be paid? One of the changes in the law on bad faith after Katrina was some insurance companies or their third-party adjusters would look solely to the flood mark on the side of a building to make a determination on how much they would pay and not consider anything else. The Louisiana legislature changed the law after Katrina and Rita and said, if you do that solely, now if it's that plus something else, that's not in violation. But if that's all the adjuster does, goes by, sees the flood mark, and the insurance company makes a payment or not based solely on that, that entitles the person who's insured on the policy to recover statutory penalties as well as the amount that's covered by the policy.
And so that would be considered bad faith. That is bad faith.
Yes.
Well, now there's a law on it, but let me expand on that because I've handled many cases after Katrina. So many homeowners said, look, you know, the winds, devastating winds from Katrina arrived 14 hours before floodwaters crept in. The waters were there for weeks, and it left that ugly brown, you know, like a dirty bathtub line on the houses. So many times in depositions where I was suing and I was alleging bad faith, these adjusters would say, I saw a line of water and it was 8 feet high or 6 feet high inside the houses, outside the houses, and we only would pay for wind damage anything above the line. So that meant all the furniture, all the drapes, all the artwork on the walls, everything basically below the lines. If it was a 2-story house, whatever was above that, great. Well, you know, they couldn't justify it because the roofs would be torn off of these houses and all that torrential rain, you could not justify it. So they were in a bad way, they knew they were in a bad way, and they would pay good settlement money because they didn't want to be cast in bad faith. They didn't want that on the public record. And so the legislature wisely said, guys, that is not rational. That's arbitrary and capricious. And thank goodness for that. Thank goodness for that. And you know, I've taught a lot of seminars about dealing with hurricane claims since Katrina, and I tell people, you know, you demonstrate that they're doing things that are just not defensible. You can't defend this, and you will get better results for your clients. And you know, the law gives us a little bit more ammunition. If they do that now, then they're really in trouble.
Yeah. Did you want to expound on that?
Well, I did. What I was saying is that's a new law that makes it easier. But John's point is well taken. If the roof goes off in the first 2 hours of the storm and the floodwaters come in the next day, any rain that came in through the roof and the damages caused to your property and everything else caused by the rainwater is covered. Damages caused by flood is not covered. So what do you do when you have stuff that's covered? That's when you go get a lawyer who knows how to do this. And then, you know, but again, now the insurance company has a right to dispute that too. And as long as they're not arbitrary, capricious, or without a problem, reasonable minds could disagree.
Right. Well, and I think it's a point worth mentioning again. We mentioned this during the last show, but just because an insurance company denies a claim does not mean that it was done in bad faith.
Absolutely
so that's very important for our viewers out there to be aware of. And also another law that was passed that changed significantly deals with deadlines and timelines. Is that correct?
Yes, I think we mentioned it in the last episode, but after the insurance company receives notice of the claim, the proof of loss, they have to initiate a loss adjustment. They have to investigate. And they had 14 days to do it originally, to start it. After the storms, they changed it so if it's a catastrophic event, the insurance company has 30 days to start. But it was changed again after Rita and Katrina, so that if the governor declares an emergency and has a declaration that more time is needed, there can be up to 2 additional 30-day periods before the insurance companies have to start the loss adjustment.
Okay, so that's very, very important.
Related topic, they also allowed people up to 2 years to file a lawsuit as opposed to typically 1 year with insurance claims.
Now, something else that we want to touch on is this whole issue of settlement. And I know that you did mention that, unfortunately, in a lot of cases, insurance companies don't offer that written settlement, which is an option that they have to exercise, and for whatever reason, they don't. But another issue concerning the settlement is that they also have a window of time in which to pay that settlement.
Yes.
And how often is that a problem when they don't pay it within that time frame?
More often than you might think. And the interesting part is that's another one of the 5 subparts of the second law that we talked about, where you don't have to prove arbitrary, capricious, without probable cause. If an insurance company and someone, either a third-party claimant or a first-party claimant, agree to a settlement in writing, the insurance company has 45 days to get those funds into the hands of the person who's entitled to receive it, or their attorney if that's the instructions. But they have to do that. If they miss it, it doesn't matter why they missed it.
Ah.
So there was a case where the president of an insurance company, or whoever the claims manager was out of town. The settlement documents got put on his desk. Other things came on top of it. He had no intention not to pay it. There was absolutely no bad faith. Didn't matter. They knowingly didn't pay it within the 45-day period. There was a statutory penalty imposed, because that's what the legislature said.
Practical perspective, many times in my career, we agree on a settlement. It's reduced to writing, because settlements have to be done in writing or they're done in open court. 30 days comes and goes. Usually what happens is the law firm that's handling the case, they get crazy busy and hectic. The date comes and goes. I get a panic call from my colleague, the lawyer on the other side. Hey man, I'm going to be in so much trouble. Please don't do this, because I can get a minimum $5,000 extra for my client. But I'll let my client know, look, we got this guy in a bad way. We're not going to do it, because I don't want bad blood over something like this. Even though they'll raise a defense no matter what, and I'll let my client know, look, we're not going to do this. I might cut my fee a little bit just to soften the blow to you, but I'm not going to do that. We're not greedy trial lawyers like a lot of people like to think. We're not going to do that. It's late, get it to me right away, and we're not going to do it.
Yeah. Well, what do you say, and this is something that we discussed a little bit, to people out there, you know, when the adjuster comes out and says, you know, this is what your claim is worth, a lot of people just take it at face value and really don't pursue it because they don't believe perhaps that they have the power to fight the big giant insurance companies. But they really do have something, a leg to stand on, right?
Absolutely. If the insurance company has not properly adjusted the claim, that's what we have. A lot of lawyers in the state of Louisiana, and a lot of lawyers who represent people who have insurance claims. So. Yeah.
I'm sorry.
The big picture is, unfortunately, very often insurance companies are watching the bottom line. They're looking for excuses not to pay as much as they should. So often adjusters tell people that's all you get. People never get to lawyers because they trust these insurance adjusters. They think, golly, that's not nearly enough. I'm just going to have to take this little amount because I guess that's all I get. They never get to a lawyer. When it comes to me, absolutely, if I think it's bad faith, I want to punish this insurance company, and hopefully they'll be more fair the next time.
Well, that brings us to a question from one of our viewers who says, is an insurance company legally allowed to lowball me, and how can the law determine what a lowball offer is?
Well, in settlement, anybody can offer anything. The question is, it'll be an after-the-fact analysis of what the insurance company did. Okay, so if it's a first-party, difference on first-party, third-party. If it's a first-party claim, they have the obligation to investigate and to pay the amount over which, the covered amount under the policy, over which reasonable minds can't disagree. If they don't do that, then statutory penalties of a mandatory 50% plus attorney's fees are allowed by the law. So can they lowball? Well, they can, but they may get their wrist slapped if they do. They may have statutory penalties done. On the other hand, a lot of times, how do you know what something's worth?
Right.
You know, how do you know if how much pain and suffering someone's going through? How do you put a value on that? And the way the law has treated that in bad faith situation on uninsured motorist claims, for example, is the insurance company has an obligation to pay the amount over which reasonable minds cannot disagree. So if someone's had a back surgery or a leg surgery, or they've been out of work for a while, and they're going to the doctor and everything else, the insurance company can't say, well, you look pretty tough, John. You're a big guy. You're probably not hurting too much. I'm going to give you $100 and lowball you. That would probably be bad faith. They have to offer the amount that reasonable minds couldn't disagree over, the minimum amount, not what it could possibly be. John may say I'm worth $1 million, but they can't just lowball and get away with it.
There's a study, I think it was published in a Louisiana Advocate's paper out of Baton Rouge, that said that Allstate's own manual said if you can convince people who call you on a claim not to get a lawyer, we'll probably settle it for 20% of what we'll settle it for if they get a lawyer. So I think absolutely they try and lowball anybody they can. And whether it's legal or not, I have my opinions on that. I don't think I think it ought to be illegal, but I'll leave it at that.
Well, we are out of time, Dean. Thank you so much for being on the show. We have learned a lot. Would love to have you come back on.
No problem.
Thank you very much.
Thank you, everybody. Be sure to join us next week when we will delve into another great legal topic and the things that you need to know to protect your rights.
Thanks so much to all of you for watching, sending in your questions, and supporting the show online. Remember, you can visit the website johnredmannpoa.com or jrpoa.com to get more information about everything we've discussed on the show. Thanks again. We'll see you next time on John Redmann, Power of Attorney.